So, 2025, what a weird year for venture capital, right? On one hand, it was an absolute blockbuster, one of the biggest years we've ever seen. But on the other hand, well, if you weren't an AI company, you might have felt like you weren't even invited to the party. Let's dig into what really went down. Okay, get this. In a year where everyone was kind of nervous about, the state of the world, venture capitalists went and invested a jaw-dropping $512 billion. To give you some context, that's the third highest number we've ever seen, ever.
Yeah, this wasn't just a little bit of growth, it was a full-on explosion. We're talking a jump of over $120 billion in just 1 year. And this happened when a lot of the experts were telling everyone to be cautious. So you gotta ask, what on earth happened?
All right, so to really get our heads around that massive jump, we need to look at the bigger picture. This recovery didn't just pop up out of nowhere. It was happening while there were all these global challenges making investors pretty nervous, to be honest. And this is where we get to the real heart of the story. Because that incredible recovery, that tidal wave of cash, it wasn't spread out evenly, not even close. You can pretty much pin the whole thing on one single transformative technology. Yep, the engine behind the entire 2025 boom was artificial intelligence. Seriously, it wasn't just a part of the story, it was the story. The amount of money just pouring into AI companies, it was unlike anything we've ever seen. Okay, if you want to understand the scale we're talking about, check this out. In just the last 3 months of 2025, one single AI company, Anthropic, raised $15 billion in one go. That's more money than the entire venture capital scene in a lot of countries gets in a whole year. And this wasn't some kind of fluke, a one-off thing. Nope. Right on its heels, you have another AI startup, the Prometheus project, pulling in a crazy $6.2 billion. Right out of the gate. I mean, these numbers are they're mind-boggling. And look, it wasn't just about those two huge deals either. The whole sector was on fire. Just in that last quarter, you had Anosphere raising $2.3 billion, Reflection AI, $2 billion, Polymarket, another $2 billion, Lambda, Crusoe, both clearing well over $1 billion. It was like the billion-dollar AI club was the only club in town. This quote from Connor Moore over at KPMG, it just nails the whole vibe. Investors aren't just thinking of this as the next hot thing. They're looking at it like it's the biggest opportunity ever. And they are absolutely putting their money where their mouth is. Okay, but picture this fire hose of cash, right? It's blasting out money, but it wasn't spraying it everywhere evenly. Not at all. Even though the global number was huge, this boom was super concentrated in just a few specific spots on the map. So if you look at the last quarter of 2025, the picture is just wow. It's one of total American dominance. The Americas, and let's be real, that's mostly the US, snapped up almost 70% of all venture funding. That left Europe and Asia with just about 15% each, a huge imbalance.
And why was it so dominant? Simple, the mega deals. Think about it. 9 out of the 10 biggest VC deals in the entire world in that last quarter happened in the US. And guess what sector they were in? Yep, almost all of them were in AI.
Now, don't get me wrong. It's not like interesting AI companies aren't getting funded anywhere else. They totally are. You've got deals like Brevo in France, Firmus in Australia, Black Forest Labs in Germany. So the AI wave is definitely global. It's just the sheer scale of the money is on a completely different planet compared to what's happening in the US. Okay, so up to this point, the story seems pretty straightforward, right? Explosive growth, all driven by AI. But this is where things get complicated. This is where we hit the central paradox of 2025. Because if you look just a little bit closer, right under that shiny headline number, you start to see some pretty serious cracks in the foundation. So here's the deal. The total value of all the investments, the sheer amount of money, it's skyrocketed. But, and this is a big but, value is only one piece of the puzzle. It's only one way to measure if a market is actually healthy. So let's look at a couple of other key metrics and see what they tell us. All right, first, let's just look at the good news again. This chart shows the total investment value. You see that big jump from 2024 to 2025? It's huge, a massive increase. On the surface, everything looks fantastic, right? Well, now look at this. This chart shows something totally different. It's the total number of companies that actually got funded. And look at that. It's a steep drop. So more money was flying around, but it was going to way fewer companies.
This left a lot of great startups completely out in the cold.
And if you thought that was weird, here's the real kicker. This chart shows how much new money VC firms themselves were able to raise for their own funds. And it absolutely plummeted. We're talking the slowest pace in a decade. So get this straight. VCs are investing more money, but their own ability to raise fresh cash is getting squeezed hard. Bizarre, right?
So what you're seeing here has a name. It's called capital concentration. And it's pretty simple, really. It just means the big players are getting way, way bigger. A huge chunk of all the available money gets funneled into a tiny handful of massive deals, and pretty much everyone else is left fighting for the scraps. That is the paradox of 2025.
So, the big question is, what does this super strange, top-heavy market mean for the future? What's going to happen in 2026? Well, let's take a look at what the experts are keeping their eyes on.
Okay, first off, no big surprise here. AI is probably going to continue to dominate everything. But investors are really hoping that the logjam breaks for companies trying to go public or get bought. Also, definitely keep an eye on defense tech. That's growing super fast. And one more thing, with AI changing everything about work, edtech, education technology is suddenly a really hot space to watch.
And this quote from Samuel Lush over at KPMG, it just perfectly sums up the mood. He says, "The show must go on." And that's really the theme. It's this feeling of, yeah, things are a little weird, a little off balance, but the fundamental opportunities are still so strong, especially in the US, that you just have to keep investing. You have to stay in the game.
And so, all of this leaves us with the one massive question hanging over 2026 and the years to come. Are we watching the beginning of a brand new AI-powered golden age for tech? Or was 2025 just a beautiful, fragile peak? A boom built entirely on one single technology, while the rest of the startup world was quietly getting weaker? I guess only time will tell.